very busy week ahead. Very busy week ahead. We have lots and lots of things to discuss today. We're gonna go through the economic calendar, of course, as always we do on Tuesdays. And I have a look at the market, and I want to show something interesting already. If you guys look at the Berkshire, right? Okay, so first of all, do you guys know who owns this company here? Well, this fund, Berkshire Hathaway Inc. Does anyone know? No? Okay, so that's correct. That's correct. Uncle Warren. That's it. That's the answer I wanted. Okay, so let's have a look on what just happened there. Look at this. What just happened there? So for you to have a participation on the fund has like, let me put in a daily chart here so we can zoom out. Pretty much since 1980. All right, so since 1980, it was a $200. It was a $200 fund. All right, grow up all the way to 2000. It's like Bitcoin. All right, all the way to 2000, 20 grand, 100,000, and then 300, and then now to $631,000 for you to own a percentage of the fund. All right, so the fund itself is $631,000, $110 and 10 cents. Right. If we look to the 15-minute chart, it's much easier to see. We had a huge, in Australian time, it was like 1:40 a.m. today. And when we had this huge spike of more than 18%. So 18.40% of a spike in less than pretty much like 5 minutes or so. All right, not even, let's say 1 minute. So it went all the way up in 1 minute and it came all the way down. So that was literally 1 minute. Okay. So it's so crazy to see. I don't even know what just happened here. I'm still trying to see BRK plus A. I don't know what happened. Oh, there we go. There we go. I think it was a glitch. Guess who is back again? Well-known Roaring Kitty is back into it. The GameStop as well has a surge. So basically, everything seems a bit crazy at the stock market this weekend. So it wasn't 100% down, but it was, I think it was 18%. Yeah, 14%. That's just strange. Oh, okay, because I'm not counting the gap here, isn't it? If we count from this one, that's just strange because it says 18.36% here, but when we go to the 1 minute, it says 50, 14. So I don't know why it's showing like this. Anyways, so if we look at GameStop as well, So if we look to the GameStop is another example. I don't think this was actually a problem, okay? Because I don't know if you guys heard about Roaring Kitty, this guy here. You guys have probably heard about him, right? The Keith Joseph Gill, something like that is his name. Um, he came to the media. All right, he came to the media after a very, very long time. He came to the media and disclosed some of his positions. And some of his position was really, 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 really large. He's still holding $180 million in one position. That's not profits. He's holding in position that much in GameStop. So when he came to media, because he stayed a while outside of the media, right? So when he came back to the media this week, sorry, not this week, I think it was last week actually, the whole market was like, oh, okay, that's really good. And to see that he's still holding $180 million in positions, um, that's really, really good. Okay. So most probably this is the reason why we saw this uptick here on the price and that much, all right? This is my view on why that happened. So if we look here from here all the way to the top, 270.55%. This is crazy. That's really, really crazy, okay? And that has happened on here in 2021. Exactly the same, all right? But that was 2000%. So basically 10 times more than what just happened. But that's not bad. 560% in one trade. I wouldn't mind. I wouldn't mind at all. Anyways, so let's have a look on what we have this week. Um, just starting slowly um for today. Okay. This week. So yesterday we had all the PMIs. Right, we had all the PMIs. So Italy manufacturing PMI, France manufacturing PMI. We had German as well. We had, um, and most importantly, we did have the USA. All right, so this is the top one that we're going to be having a look today. Of course, we're going to have a look in all of the economic calendar, um, but most probably what will actually influence the market this week will be the US dollar as well as the euro, ECB. All right. What do you guys think about the ECB? Before we go any further, I would like to um I would like to know what do you what do you think about the ECB? Because there's so much people saying that the ECB will cut, so much people saying that the ECB won't cut, and I would like to know from you. Um, so Switzy think that they might cut. All right, okay, all right, guys. So my option is that they won't cut. Okay. So yes, inflation is going down and everything. They're pretty close to the hit. 2.2%. They have to bring down more 0.4% if I'm not wrong. But still, 0.4%, it is quite a bit of work. Um, okay. So you say they won't cut. All right, cool. So 0.4% is quite a bit. But we can't how can I say that? We can't say that it's not a good job that they have done because they did quite a good job when we think about it. Like even US, they haven't been capable to reduce the inflation, right? We're gonna have to go slowly but surely today, guys, because I don't know what's happening with me. I don't know. This is a very, very bad flu I'm getting. No. So on Tuesday today we had no, it's all good, mate. We had all the PMIs from US, and that's the reason why the US dollar is so weak. Such a, you know, bad PMIs. Look, was waiting for 60, it came 57, was waiting for 49.8, it came 48, sorry. So really not good for the USA. And most probably we will continue to see these happening more frequently right now. Anyways, so moving red. Today we're gonna have German unemployment change in unemployment rate. We still have, right, in 30 minutes, sorry. Wednesday we have George's job opening, GDP for Australia tomorrow, and of course Eurozone composite PMI, and services PMI. We're gonna have as well ADP non-farm employment change, S&P Global Services PMI, and as well Bank of Canada rate statement and interest rates decision. Non-manufacturing employment, non-manufacturing PMI, and non-manufacturing prices for US on Thursday. And the well-known ECB deciding the rate. So basically monetary policy statement and the interest rates decision, and then ECB press conference. So very important day on Thursday, and right across on Friday we're going to have the NFP and unemployment rate and all the things we already know, combined with the GDP from Europe. So that is a very nice week ahead. So we're going to have lots and lots of volatility on the euro dollar, and is the one that I've been perfectly trading over the wall last month and past 2 months, let's say. That was my preferable trading instrument. Let's have a look at the charts now. Where is it? Here. Okay. There we have it. Euro dollar. We can see that euro dollar did actually quite went down. Yeah, I was on the wrong side as well. I was short and I got cooked because I wasn't really expected that PMIs to be that bad. All right, PMIs was really bad for the US, of course. Was horrible, was terrible. And I wasn't expecting it. So when we look again, when we look again to this, it's like, oh my God, what just happened there, right? Because I was actually expecting, just broke down the stop, this bottom, and went all the way. I was waiting to go all the way down. I thought this may be a retracement, okay? That here we could call the top, and then the market was coming down. But that didn't happen. It just broke through it. It broke through it. And it went really quickly up, especially yesterday. I don't know you guys, but it's not showing here on the okay on the trading view. But if we look on the real deal, on the MetaTrader, let me bring this up here. You can see that there is a gap, right? There is a big gap here of 82 points. So most probably we will come to close this gap. That's what most of the times it happens. I'm not saying it will happen, but most of the times what happens when we have a gap, this is what usually happens. It comes down, we close the gaps, and then it continues the trajectory up or down, whatever. Okay. So just bear in mind, I don't know if you have this gap, but most of I have some different pricing feeds here. And this is another pricing feed. There is a There is 119 points of difference on that one. I have some other different pricing feeds as well. It was all have the gap. So most probably the gap was widely known between different price providers, okay? Liquidity providers as well. Now, you know, looking at these, I don't see a sense to short it now, okay? Because yeah, of course, if my thesis gets right, it comes back to somewhere around here to fill the gap. But this is not a trade, all right? It's not an actual trade. But we can see that the US dollar is actually weakening. And let's have a look on what if with this US dollar weakening, what just happened? Oh no, okay, there we go. What just happened with the CMA too? All right, the Chicago Mercantile Exchange Fed Watch to okay, that's interesting. All right, okay, there we go. So I don't know if you guys remember, but last Thursday, when we've done the week wrap up, the market was predicting a cut on the 7th of November, right? But before it was predicting on the 18th of September, and then it went to 7th of November, and now it came back to 18th of November. So pretty much because of the data we just got released this morning, well, for me it was 1:40 a.m. The market is now priced in, it's pricing in. It's not priced in, it's pricing in the cut on the 18th of September again. All right, so 52.6% of the market is expecting a 25 base points cut from the Fed on the 18th of September 2024. And continuation of 7th of November, 48.1% of the market is expecting a hold again from the Fed. So when we look again on December, nothing happens. Well, 38.1% of the market from 34.9% of the market is expecting a cut. But very, very hard to happen twice. I think once to nearly none. All right. This is only if the data continues to come as it is. If we have anything a little bit above, it's gonna just configure all the other data again, and it's not gonna make sense, and it's not gonna be good. Okay, so most probably, we may have a cut. Most probably, if the data continues to come as very bad. All right. Well, bad. Yeah, very bad. But looking for a more professional approach, right? We've just broke the top here. And it would be smart to us to trade the continuation of this, right? To 1.10. Still have a lot to go. If we look here, still have a lot of room to go. So maybe if it comes actually here, then it would be good for us to, trade with the new trend that it's not that new, have started already on April. And it has since reversed it. When was this? In 2023. So basically the whole year in 2023 was very bad. And then now we're looking like we're gonna get to 1:10, all right, 1.10, sorry. Looks like it's very possible for us to get this retracement and a continuation to up. If it comes to here, that's not a bad trade at all. Okay, this is really not a bad trade at all. because it's a positive risk reward. It's just like a 1 to 2.58. So that's really good. But you know, if you want to like get the other way around, that doesn't look too good for me. Just because the risk reward is not 1.8. So like to be good, it will have to go somewhere around here. But then your risk is too much trading against all of this bad data from US. Where it is, there we go. I want to make sure here that everyone understands that the euro data is not that good as well, okay? The whole euro dollar move up was pretty much the US data being very, very bad. This was the reason, all right? Not because we had like a good euro data, because we didn't have good euro data. Now, if the market is thinking that the ECB would cut, I wouldn't expect this move to happen as it just had. All right, this huge move up. I don't think it would. I don't think it would. It's just because it doesn't make any sense for me to have such a huge move like that when the market already knows, when the big boys already knows that the ECB would cut. But in another way, it could make sense because then it would be a better price for them to short. It's just very hard right now. But when we look to inflation, inflation is not yet under control. So why would they cut when inflation is not under control yet? You know what I mean? So it just doesn't make any sense for me, okay? Now, let's go for trading here again. GBP USD, sorry, USD JPY. Yeah, again, here we can see how bad the US dollar is. It's still losing for the for the JPY, okay? Even JPY it's not looking great. I'm starting to doubt myself if USD JPY could go for higher levels. It reached 160 and haven't yet think about it coming back there. Oh, there we go. So you reached the 160 level, and since then it haven't yet retraced it back. Of course, it retraced 50% of the move already. It retraced already 70, yeah, 75 basic, no, 70%, 70% of the move. But when we look for the JPY is still very weak, and I'm expecting then to continue to go to the upside, but very hard to see that happening now. With that bad US data. And look, there is a big box right here. I'm not saying that could potentially come down to there, but with the bad data, it's just very hard to not consider those types of levels right now at like 150, 500, 151, 500. Okay. Because they haven't yet reached it, and it still has a lot of room to go down to here. All right, so it's just very hard yet to trade USD JPY. Guys, do you want me to have a look on any specific charts? Put in a comment already, because when I finish these, I will go and have a look on the specific charts you guys want me to do. Now, going to GBP USD. Going to GBP USD as well, I were on the wrong side again on here, so definitely not a good start for the month of June. That's okay, because we are still very up when we look into for a big standpoint. And this is something that you guys have to always understand. It's not about like, okay, it's about like yesterday, for instance. No, you need to understand that it's for the whole history, right? You need to keep track of that. And the best way to do this is if you use MetaTrader 5, does it what do you guys use? MT4, MT5? Aussie CAD, GBP CAD, yep. USD CHF. Iran always wants me to MT5. Where is my mouse here? Always wants me to have a look on USD CHF. You must be trading um like a Switzerland bank, right? Always wants to trade their own currency. Okay. MT5. Okay, so for those who use MT5, if you go to MT5 right now, let me see MT5. But if you have an MT5, it doesn't work for MT4, solely for MT5. You can just click Alt E as it says like here, and you will get um a whole history of your account. The best. Let me see if I click. Yeah, it doesn't show to me, unfortunately. Otherwise, I would love to show to you guys. Beautiful view of how your portfolio have been performing since the open up of the account. As of MT4 doesn't have it. So I personally use MT5, as I've always been using MT5. In my opinion, it's better than MT4, but MT4 there are some best things as well. So both of them are good for just events. MT4 more for EAs, I would say. MT5 if you want to trade manually, I think it's one of the best. Anyway, so coming back here, GBP as well, as I was saying, not looking too great. We will have more data coming this week. New Zealand USD. Yeah, New Zealand USD is nearly hitting the target, 6,209. So I would just wait. So wait there, come back here. Now it's playing the way I want it. It has to go a little bit more up here to hit there and then come back all the way. But that's a huge trade. I mean, it's nothing like a 1 day trade. It will probably take long trades, but um, let's have a look on this and see how it goes. USD CAD. USD CAD doesn't look any good. It's too ranging. See, like these types of market, it's just not worth. So it's not worth to be trading in my opinion. All right, there we go. So let me. I'm really not feeling well, guys. I'm so sorry for this. I know I'm not giving 100% to you, so sorry. Anyway, so basically, if you look to USD CAD as well doesn't look too good. You mean USD CAD or sorry, sweetie. You mean on USD CAD or New Zealand dollar? Let me check. Uh, you mean here? Nah, I don't think so. I don't. Nah, I'm not looking it as a breakout. No, I'm looking as like okay, end of trend. Because the trend is still down, a continuation to the downside. This is how I'm looking at. Again, USD CAD not looking to. CAD-JPY, look at how CAD-JPY is weak. I mean, look at how CAD is weak at this moment, right? Even JPY is not that strong and is still getting carried away from the Canadian dollar. So there is a very, very interesting trade here for sure happening. I'm just not comfortable to get involved on these types of trade. As JPY, is still very tricky to trade. So I'm just trying to evaluate the situation and saying, okay, this is JPY. I do have better options. I'm just not going to look into JPY anymore. Now, let's jump right across gold here, because gold has been a good trade that I've managed to take on last week. Is anyone trading gold here? Yeah, we always have someone that trades gold. I was trading on the short side last week. So that was kind of good. But we got hit the target, and I've mentioned this target quite a bit. Maybe it was 2 weeks ago or something, when the market was trading around here. When I think I took a short. I took a short on here, right here. I've mentioned to you guys. I was like, okay, yeah, last Thursday, Friday, Thursday, right here. I took a short right here. I was like, okay, I'm gonna get on a short here because it looks good. And then the market went up and then all the way down and got hit my target. So that wasn't a very, very good trade, because I got somewhere around here. Yeah, so it was a very bad trade in terms of risk management. But the opportunity presented it. I was okay sure that the market would go down there. It did, but it before went all the way up, so that kind of scared me a little bit. Now, let's have a look on Aussie CAD. Aussie CAD looks okay. Let's go for the 4-hour. Looks on a very good spot. So remember, I've always mentioned about the boxes, right? The boxes, 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 and we've just break through the stop as well. But it just doesn't look good in a perspective of, okay, this is a good point to trade. It does look good. Sorry, it does look good, but it doesn't at the same time. I think we're gonna have Bank of Canada this week coming with the rates. I would rather wait to see what they would say and trade Aussie CAD next week than to this week. GBP CAD, oops, sorry. GBP CAD. Yeah. It's so crazy to see how strong the pound is getting against the Canadian dollar. Sorry guys. And I was expecting it to regret it down, and it just broke the top. So looks like let me put in the 4-hour here. Yeah, wow. Okay. Interesting. Yeah, there is a box here. Yeah. Look, we have the pound, we have the Canadian again here on this. I would rather wait for the CAD, the Bank of Canada, to do something, and then come with an answer for those trades with Canadian dollar. Okay. But looking at the trend would be much more appreciated trading long positions, because it is a uptrend, than actually short positions. All right. No technical, no fundamentals, just looking at clearly at the trend. And if we look like since basically 2 years already, nearly 2 years, we have been on an uptrend for GBP CAD. But it's always good to wait and see what will happen with the Bank of Canada. So I hope everyone have a good week ahead. And I will definitely take some rest. Thanks to it. All right, guys. Thanks so much. And I talk to you on Thursday if everything goes well. See you guys. Bye bye. Cheers.